Hey everyone, this is Mike Andes, and you're listening to the Business Bootcamp Podcast. Today I'm going to be sharing with you where I invest my money and what thoughts you might want to be thinking about if you have excess cash that you want to invest and grow instead of letting it sit in some savings account making 0.1% interest. That's what we're talking about today. I don't usually talk about personal finance and those sort of things, but I wanted to share this because I got a lot of questions about it from business owners once they begin to get pretty successful in their business. Now, before we get into today's show, a big thank you to today's sponsor, gusto.com. That's gusto.com/bootcamp. Go to that URL to get an exclusive offer just for the listeners of this podcast. It's a 3-month trial instead of their usual 1-month trial. So you can try it for an entire quarter. So if you get it now, you can try it for October, November, and December of this year, and then have it print out your W-2s and email those to your employees and really test out the software. So I encourage you to do that, see how easy it is, and if you're like me, you are now finding it hard to find a lot of laborious type positions, and people are looking for benefits, and if they're looking for benefits, they want to make it simple and make it easy for you as business owner or someone doing payroll. And so they have a great dashboard on Gusto where you can manage all of your HR and benefits and healthcare and 401k, all of that you can manage from one place. Check it out today. Go to gusto.com/bootcamp. Now today we're going to be talking about investing your money, and like I said, I don't usually talk about this sort of thing, but I usually kind of stick to the narrow lane of business and what I'm up to and things like that. But I get at least asked this once a week. Someone will email or contact me about what do I do as far as investing my money once I do have a successful business, or I'm starting to make money, I have some money in the bank, or maybe I'm young and I have 5-10 grand laying around. Like, where do I invest this money? Because it's very simple or very plain and obvious that you don't want to be putting in some savings account making absolutely no interest whatsoever, and you might as well hide it underneath your mattress instead of putting it in a bank account. Honestly, the levels of interest rates these days are very, very low, and so that makes sense. That's cool. So then people ask, well, where do I invest my money? A big part of this, before we get into the 3 different ways that I talk about when it comes to investing your money, is the number one question is, how much money do you have? Because some of the things I'm going to be talking about today require more money. So for instance, real estate, unless you get really creative and start raising money or having investors and things like that and doing 0% down loans and things like that, a traditional real estate loan or traditional real estate investment, you are going to be required to have 20-25% down on the loan if you're doing it for commercial or if you're doing it for investment purposes. If you're living in it, you can get away with like 10% and 5% and different types of loans for real estate. However, usually if you're doing an investment deal and you're not living in the house, you're going to be looking at 20-25% down on the project. Now, if that's a $500,000-$600,000 house that you're buying, or duplex or triplex or whatever you're buying when it comes to real estate, if it's $500,000 and you're paying 20% down, that's $100,000 in cash you need to have up front. And you obviously need more than that to have some sort of liquidity and not just give all your cash away. So 100 grand is not a drop in the bucket by no means. And so what do you do when you don't have that much money? What do you do when you have 5,000, 10,000, 20,000? What do you do when you have $1 million? So like, there's always these questions. And so I just want to preface it all by saying, though, it obviously depends a lot on how much money you have set aside to invest and grow. So really, when it comes to investing, I look at it from 3 different perspectives. There's 3 ways to invest your money, and I'm going to talk about those. So number 1 is your business. Number 2 is real estate. Number 3 is paper. And when I say paper, I mean stocks and bonds, the Wall Street and stock market. So this is the deal. If you have a ton of money, you can't necessarily have a bunch of different businesses. You can't be buying like 20 businesses and running them all. It's very difficult to do that. And so you need something that you can put your money in and not have to have as much time involvement in managing that asset, in managing that business. And so if you have a bunch of money and you go and get real estate, it takes less time on a day-to-day basis to manage that real estate than it does to own a business. So when we talk about these 3 different types of investing, business, real estate, and stocks, as you go from business to real estate, your required involvement on average is going to reduce. The amount of time, the amount of sweat equity you have to put in the business. from going from a business to now investing in real estate, your amount of time that you have to spend on that business decreases. Now, if you go to paper or stocks and bonds, it's almost completely passive. Your day-to-day involvement is very low. A few minutes can really manage all of your quote-unquote investment. And so as we go from 1 to 2 to 3, from business to real estate to paper and stocks and bonds, your involvement, your sweat equity really decreases in the amount of time that you have to spend on the investment. So this is another part of the equation when it comes to investing your money, is how much time do you want to spend managing the investment? Because if you're going to run a business, it's going to take more involvement. You're going to have to hire people, you have to market, you're going to create websites, you have to grow, you're going to have to expand, you're going to have to find shop space, all the things that go into running a business. If you get real estate, it's a little more plug and play. Like this, there's a lot more upfront cost. There's a lot more involvement upfront, perhaps. But once it's, you have tenants or you're renting out to, whether it be commercial space or apartments, usually it's pretty plug and play. Like, get it started, and then you just have to do some maintenance, collect checks, and make sure that, the place is running optimally. But it doesn't take a whole lot of time and energy on your part on a day-to-day basis. Third one, the paper, the stocks, the bonds, you literally can manage it from a website. You can manage it through your portfolio manager, and most people don't ever see it. It's just a bunch of digits, and they can quickly manage that. A matter of like a few minutes a week, they can manage their entire portfolio, and it's very hands-off. Now, that being said, this is again my opinion, the returns on investment, the ROI, is typically lower as you go down from 1, 2, and 3. So when we talk about stocks and bonds, a good return on investment, 10%, 12%, 20%, like those are amazing investments on average if you put into mutual funds or different types of stock, options, things like that. Like, there's different ways to do it. There's different types of venues and stock. I totally get that there's different products that the Wall Street packages together, and whether it be stocks, mutual funds, et cetera, et cetera, et cetera. There's a million different types, but on average, a 10% return right now is fantastic. When we go to real estate now, people are, inclined, if they're going to spend money, that they're going to have better return on investment on average for a year, for instance. They might not be happy with 10%. They might want something more like 20% or 30% per year if they're doing like a value add to an apartment complex, or they are somehow making the property better and trying to sell it in several years. Some people are just happy with literally like a cap rate of 5-6% even on real estate. So again, less time and energy is spent on the day-to-day for real estate. But for business, that number one area you can invest your money, that is really where the highest risk is, as far as most people go to zero, but then there's also much higher return on investment. If you do really well in your business, you can easily 10x, 20x your money over the course of several years if you're doing things right. You can start a business with $10,000, and 3 years later, it's making, that money is now worth, say, $50,000, $60,000, $100,000 if you're running the business correctly and it's growing and thriving. And so it's really interesting here is, well, what do I do in my, for me personally? And this is how I kind of look at it, is as I make more money, I'll go from 1 to 2 to 3. So as far as right now in my career, I'm focusing a lot on investing in my business. So if I get extra money, I'm starting a new business, I'm buying another business, I'm growing my existing company, I'm offering some sort of product or online service for free. Like, we're writing a book right now, and that's going to be as free as I possibly can make it. I'm doing a conference, and that's for free. I'm going to probably lose money on that. But like, I'm investing the money in the business for the long-term growth of the company. And companies that I run, and so that's what I'm focused on now. As I make more money and I have less and less time to spend on doing that, real estate will probably be my next step. Number 2, less involvement. It does require more capital, but I'll have that from all the businesses I have, and then as I grow older and I have more money, you can't manage it. You can't even find good investments as far as from a business standpoint, perhaps, or perhaps in raising capital for small startups, things like that, like as private equity. Like, maybe those things dry up. Maybe the real estate market's really, really hot. So maybe then you do go put it in paper. Like, that's my third step. Less and less time and involvement as I go from 1 to 2 to 3. From business to real estate to paper. But the other thing that I don't like, and at this stage in my career, is that as you go from 1 to 2 to 3, you also lose control. So the biggest reason people always ask me, well, do you invest in the stock market? I say no, and it's not because I don't believe in it or because I think it's gambling or whatever. Like there's so many different ways you can look at it. The reason I don't like it is because I don't have control over the companies that I'm investing in the stock market. I don't have control of whether or not Apple releases a better product. I don't have any control over whether Samsung's CEO gets in some scandal, or I can't control whether or not General Electric hires a pathetic board of advisors and all of a sudden they go to zero. Like, I can't control any of that, and thereby I can't feel confident. I can't feel good about putting my money there. It's less involvement on my part. It's more passive, much more passive. However, at this point in my career, I'd much rather invest in something that I have a lot of control over. In other words, I might be risking it more by investing my money in my business. Number one, it's more volatile. There's higher rates of return. There's always more risk of loss. However, I'm in complete control. Like if I start a business tomorrow and it fails, it's my fault. I was the one that made the decisions. I was the one that brought the thing down, and I was also the one that could potentially make the thing a big success. At the end of the day, all the weight is on my shoulders. And right now, I'd rather have control than have the passivity, if that's not probably even a word, but the passive nature of stocks and bonds. I would much rather have complete control over the money that I'm investing, partly because, I don't have money to burn. If you have money to burn, maybe you do go invest in stuff because it's like, if I lose it, I lose it. If I don't, if I can make 5-10%, great. However, at this point, I would not myself invest money in the stock market because I don't have control over it. That being said, as we speak right now in September of 2018, I do feel the stock market is pretty bloated as well. And so I feel that, in the next 5 years, there might be a little bit of a correction in the stock market. However, that being said, this is not about that. This is simply about where do you invest your money. Say, well, I have $5,000. I'm running a business, and I'm wondering what I need to do with that $5,000. Should I go get in real estate? Should I buy, E-Trade and go online and start investing in mutual funds or something like that? There is no correct answer. However, if you have a smaller portion of money, I would highly recommend, if your business is doing well, to invest it in the business. So $5,000, if you're running a company that's doing $500,000 in annual revenue, if you invest $5,000, 1% of your revenue, into the business, there's a really good chance that $5,000 could end up making you $100,000 or $200,000 extra in revenue. And if you're having a good profit margin of say 20% on that $100,000 or $200,000, you're making $20,000 to $40,000 on that $5,000 worth of investment in the business. So if you have a business that's doing well and growing, that's the number one place I would look to invest your money. If you have a business that is kind of generating really good revenue, you don't really want to grow it or scale, it's a plateau, but it's very consistent in the nature of its profitability, then maybe going to real estate or the stock options is something that you want to do and be more passive about it. And especially if you're wanting to retire or you're wanting to spend less time at work, definitely real estate and stocks and bonds are going to be something that's more appealing to you. Yes, the rate of return isn't as high. Yes, the return on investment might not be as high, but you don't want to be involved as much. And when I say for myself, the one in control, in your mind, you're like, I don't want control. I want to be passive. I don't want to have to ever think about what the daily operations of a business are. Then definitely real estate and paper is where you'd be wanting to point that money. That being said, I would highly encourage you to, if you have a successful business, a business that's growing, that is thriving, invest the money in that first. And then once you get 100, 200,000, then maybe you go put down payment on a triplex real estate piece of investment that you can go to once every couple weeks and just show new tenants their thing and fix a little something here and there. Spend a couple hours a month managing that. Less, like I said, less sweat equity, is more passive, but it's growing. It's growing with inflation. It's growing with just the cost of rents. You can do some value add maybe during some time when you're slower in your business, and then you can raise the rents more and increase the cap rate of the company, and the cash on cash return gets better as you begin to increase the rent values of that place that you might be renting out to tenants. And so that's always something that you can do as well. I would say for most people, they should if they're an entrepreneur and they have a successful business, if it's small amounts of cash, invest it in business. If there's money that you have to burn, or there's money that is you could lose tomorrow and not really care about it, then maybe real estate or paper is something that I would start to invest in. So that's my 2 cents. Again, I'm not right about all this stuff. This is just my, one man's point of view and the way that I look at investing my extra cash. And so I'd really recommend that you look at what your goals are, where you want to go, how many hours you want to work in a week, because if you want to be cutting down your hours, you're going to be looking for something more passive. You're not going to be wanting to go out and buy more businesses or invest a bunch in marketing, because when you invest in marketing in your business, now you get more business. And then when you get more business, you got to hire more people. And then now when you get more people, you got to manage those people. And all of a sudden your overhead goes up, and then you got to, it becomes a much more tangible, operational, every single day involvement by you as the owner. And so maybe that's not for you, but there's definitely more rate of return, higher ROI in that method. It's higher risk, higher reward sort of scenario. So if you have any questions, I'd love to help you with that. I know some of you have been asking me this. I've been trying to get back to you. It's a very similar answer to the one I'm giving you now, but a little more specific sometimes when people have a certain amount of money and they say where their company's at and things like that. Let me know if I can help you. And as always, if you have a question on how to start, grow, or save your business, go to businessbootcamppodcast.com. Until next time, everyone, be great, because nothing else pays. This is Mike Andes on the Business Bootcamp Podcast, signing off.